I'm very keen on this idea of unlocking Bitcoin equity through leverage, but I have yet to do it. And I don't know what it is that stopped me, but I just haven't seen a product that's really made sense. And I've also not understood, like, what am I going to do with the capital once I've taken that loan? And in particular, I've been trying to understand how to buy a house. That's the only thing I would like really want to buy. So, okay, I need a mortgage of some form. I can use the property as collateral for that. But then you've got to get the deposit from somewhere. If you sell your Bitcoin, then you don't have any Bitcoin cap growth. Could you do it with a loan? Oh, but then you get shitty terms. It's like you've got to put $1 million worth of Bitcoin in to get 500 grand out. Does that make sense in terms of the 50% loan to value ratios? The liquidity risk is high. The counterparty risk is high. And then this came through and I'm like, wow, the tax risk is also really high. And so again, I'm not going to read the whole article. Please dig it up. I'll put links to all this stuff in the show notes. But the really important point here is, and what Wiz points out, you have to be very, very careful as to what happens with the custody of the Bitcoin that you take leverage against. He made some recommendations of some businesses to check out. So Firefish, I had Igor on the podcast recently. Check out the episode with him. And I have a friend who is actively using Debify and is really, really happy with them. So I was going to just show you that website as well. But what I thought there was a couple of bullet points I was looking for. Okay, here we go. So the thing that really hit me here is basically, right, let's give the example of Australia. The Australian Tax Office has a very specific way of looking at ownership of assets when it comes to whether or not there has been a capital disposal or not. And what Wiz points out is that if you use a centralized lender, then there is a case to be made that when you send your Bitcoin to this other party, that actually creates a change of beneficial ownership of those assets, which means it's actually a capital disposal. And then on top of that, if the person you've sent your Bitcoin to get the loan from is mixing your capital in with other pool of Bitcoin being used as collateral, that again hammers home that it's been a change of ownership. Now, it's legal jargon, it's small print, but it's like, phew. Imagine if you'd gone and said, okay, I'm going to take a loan of 50% of my Bitcoin stack, so I'll get a 25% leverage against my entire wealth. And actually now the ATO is going to be calling you up saying, by the way, that 50% of Bitcoin you sent to get leverage against, well, you owe us CGT on that. Like, shit. So not only are you paying for the cost of the loan, you're also paying for the cost of the tax to send it to someone as if you've sold it. Like, whoa, this is a massive, massive road bump that people have not thought about a lot. Well, what does it mean? It's very simple in a sense. If you send your Bitcoin into a non-custodial service, then the ownership of those coins has not strictly changed hands, and therefore there is not necessarily a taxable event. And this is a massive point. Okay, so now I could, using some of the products that are out there, as I mentioned already, Firefish, Debify. I'm just going to bring up here, this is the Debify website. Go check it out. I had a small play around with it myself, logged in. You get your own seed phrase in case you lose your key as the backup. And there's then basically a marketplace. So on the one side of the marketplace, you have people with Bitcoin that are willing to lend it to get collateral, to use it as collateral for a loan. And on the other side, you've got people with dollar capital, like stable coins, that they want to then loan out to people for a fixed return. Now, the interesting part here, and just to hammer home this tax point, is if you use a non-custodial Bitcoin leverage platform, then there is no CGT to pay. Interesting. Okay, so now you've got to find a non-custodial service. Obviously, you then have to find someone within that marketplace that actually wants to loan you their money in exchange for putting your Bitcoin into an escrow, essentially. Now, Igor will talk me through how Firefish works. They use things called oracles. And it's kind of like having a multi-sig account where the lender has a key, the borrower has a key, and then the third party in the middle, i.e. Firefish or Debify, they have control of what is essentially a smart contract where if the borrower doesn't pay on time, or if the collateral doesn't cover the loan at an effective rate, they can step in to kind of mediate. What I mean by that is the liquidity risk. So if Bitcoin's 100K today and it drops to 50 grand, then your loan to value ratio is no longer 50%, you're at 100% if you'd taken a 50K loan out, at which point you need to put more Bitcoin in there. The point with that, though, that's interesting is actually you can you can manage that. And especially someone like my friend Jigs, again, shout out to him, who's got excellent technical skills. He can look at the price of Bitcoin and he can start to predict when he's going to have liquidity problems and make sure he's got Bitcoin sitting on the sidelines to then put into whatever loan contracts he's got set up. Now, shout out to my friend Jeremy, who sent me this week, zone21.com, really interesting comparison site that's popped up. So, okay, look, well, we can see here, they even have detailed the custody of it, right? So that Unchained, Debify. I don't know who these people are down here. Firefetch, there we go. LenderSat's another business I've heard about. DeFi. So these guys, that's non-custodial to my understanding. Now, each of them have different credit limits, 50% LTV, 70% LTV. So you can work through this and try and find terms that make sense for what you're looking for. But, you know, people who are taking loans from Strike, for example, they are, in my opinion, in breach of the CGT terms of the Australian Tax Office. Now, in my experience, having grown up in the UK and now lived in Australia, the UK will have very similar rules as well. This, to me, is a big problem because people haven't understood this. You know, Leaden, for example, which is where actually Wiz originally came across this issue, they're happy to share with you their terms, but they make it very, very clear that they are not tax advisors and that all of the tax risk is on your shoulders. And rest assured, they will come and find you if they think they owe you lots of money. Now, the really important piece here that has to fit into the market or has to fit into your strategy is, okay, let's just say we're going to have an all-time high later this year. Okay, that's going to be the maximum purchasing power that I can drive out of this current investment strategy. Should I take some profits off the table? 10%, 20%, 30%, 50%? I don't know. My daughter's waving at me through the window. And you have to decide that for yourself. Maybe even 100%. You're so confident on this idea of cycles remaining. Go for it. But what do you do with the capital? Do you keep it in a stable coin somewhere on a exchange or in self-custody? Do you keep it in physical dollars in a bank account somewhere? I don't know. You've got to take into account counterparty risk, got to take into account inflation risk, all sorts of things to think about.